This is the video demonstration on the statement of cash flows. In this video, I'm going to work the solution to example number 4. And this example involves the ABC Company. And it says that the following information has been provided. First of all, we have some information here that says miscellaneous data. And essentially this is basically about 5 or 6 different items of additional information that they have provided. And then below that, we see a copy of the comparative balance sheet, and this is dated as of December 31st, 2012. Now, a comparative balance sheet is like a normal version of the balance sheet taken to the next level by including 2 different years. So that way we have a comparison. So this not only includes everything that appears on the 2012 balance sheet, but also everything from 2011. And by having it in that format, it allows us to see how things have changed from one year to the next. And then we also have a copy of their December 31st, 2012 income statement. And if we look at number 1 under requirements, they simply want us to prepare the statement of cash flows. Now remember, in our video lecture on the statement of cash flows, I said that we had to have 3 things, and these were the 3 things that we needed: a current copy of the income statement, comparative balance sheet, and miscellaneous data. And if we were armed with all 3 of those things, we would have everything we need to be able to prepare the statement of cash flows. Now, to prepare the statement of cash flows, I'm going to utilize Excel. You could do a statement of cash flows in Excel if you wanted to. You could also do this on paper, but to save time, I've gone ahead and set everything up for me in advance. I have the name of the company, ABC Corp, statement of cash flows. This one happens to be direct method. It is for the year ended December 31st, 2012. Got a couple extra zeros there in 2012. And then I have all my titles. Now, generally speaking, the statement of cash flows does adhere to a pretty standard format. You have your operating activities first, then your investing activities, then financing, and then you have a section at the bottom on cash. And those titles don't really change very much. So it's pretty much a standard format. And of course, by setting all this up in advance, it just saves a little bit of time so that I can focus the majority of this video on the actual calculations. Now that's the direct method version. There's also an indirect version, and we're going to prepare both versions because remember, GAAP does allow us to use either of those 2 methods that we want. So it's good for us to understand how to do both methods. Although they're not entirely different, there are going to be certain things that are the same. And also to do this, we're going to utilize certain formulas. And the formulas, I also have these saved in my Excel file, but I also have this document on our course website where you'll be able to download this and you will have all these formulas as well. But this is a whole series of different formulas that we utilize for the statement of cash flows. All of these formulas are in your textbook. A lot of them we've talked about in the video lecture, but the nice thing about this is this consolidates all the formulas into one place. So that way it's just very easy for reference purposes to find these formulas and find the information that you need. Now, one of the things about the statement of cash flows that's a little odd is the order in which we do the statement. We tend to do the statement in a very particular order because that way we will have an ability to check and make sure that it's correct. The nice thing about statement of cash flows is that it does have a built-in system of checks and balances. So I'm going to start off on this direct method statement, and the very first thing I'm actually going to work on is actually the very bottom. We typically do the very bottom section first, and this is the section that deals with cash. Now what I see here, I see net increase in cash, cash beginning balance 2012, cash ending balance 2012. So what I want to know is how much cash did they have at the end of the year, how much did they have at the beginning, and what is the difference? Because the difference, that will be the net increase in cash. So I'm going to go back and look at the information they provided. And when you first do a statement of cash flows, to be honest, the most difficult thing is simply figuring out where to look for the information. And the more you do this, I guess it just becomes second nature. So I just tend to just jump around and I know exactly where to look. But when you do this, it might take you a little longer because you might have to look a little bit more to find what you're looking for. But right off the bat, if I know that I want cash, I know cash is an asset and it's on the balance sheet. Now, what I see about cash on this comparative balance sheet, I see that back in 2011, they finished the year with $70,000 cash. But in 2012, they had $944,000. So what they had at the end of 2011, that would be my beginning balance in 2012. So that's $70,000. That's going to be my beginning cash balance for 2012 because that's the ending cash balance from that year, from the previous year. Now, in the current year, it says I have $944,000. So my cash ending balance is going to be $944,000. And then I'm going to take the difference there. If I had 944, if I deduct from that 70,000, that's a difference of 874,000. So cash increased $874,000 during the year. And that particular number of 874,000 is a very important number. That number, since I have this number in advance, that is going to be my check number later on. And I'll be able to use that to make sure that everything is correct. Now, the next thing I want to work on is sort of in the middle of the statement, this investing activities section. Now, the information that I need for this section, as well as financing, all of that information is going to come from my miscellaneous data. So I'm going to go back up here and look at this miscellaneous data. The very first thing that I see there, it says that they sold equipment for $27,000 cash. So right here it says cash received from sale of equipment. That's going to be $27,000. What's the next item of miscellaneous data? The next item says that we purchased equipment costing $132,000. How did we pay for it? With $35,000 cash and $97,000 trade-in of old equipment. So really, we're doing a statement of cash flows. So even though the new equipment normally cost $132,000, and even though we traded in $97,000, really the cash part of it is this $35,000 that we spent. So right here where it says cash paid for equipment, that's going to be $35,000, but I'm going to put that $35,000 as a negative because that is cash that I paid. And this is a good time to talk about this. I'm going to have a lot of positive and negative numbers on these statements, and that's because I want to show that some of these items are an inflow of cash, some of them are an outflow of cash. So these are the only two things that I have under investing activities. So if I have a negative $35,000 and a positive $27,000, what is the difference there? Well, overall, if you net those two together, that is a negative $8,000. So that's what I have from my investing activities. Now, to do my financing, I'll use the remaining amount of the miscellaneous data. The next item says that we borrowed $6,000 cash by signing a note payable. Well, right here, cash borrowed on short-term note, $6,000. The next item says that we paid $41,000 to reduce the long-term notes payable. So cash paid on long-term note, that's going to be $41,000, but notice that because it is cash paid, I'm going to put that as a negative. The next item says that we issued $1,800 shares of common stock at $10 per share. Now, whenever we do that, we're making money on that. That's money coming in as an inflow. So the 1,800 shares, if we sold each one for $10 a share, that is $18,000. So under cash received from issuing stock, 18,000, and that's a positive. And then finally, says they declared and paid 9,000 cash dividends. So that's cash paid for dividends, 9,000, but because they paid the 9,000, that's a negative. So ultimately, what I have there is a positive 6,000 minus 41 plus 18 minus 9. If I net all those together, what I have there is a negative 26,000. So basically, from my investing activities, I have negative 8,000. From my financing activities, I have negative 26. And down here on cash, I have an increase in cash of 874,000. So that completes everything on the direct method statement except the very top section. That's the section on operating activities. But before I do that, I do want to show you something else. Remember, we have two different versions of the statement. We're going to do a direct version and indirect. But here's the nice thing. The reason I do all this first, this bottom part, that part is actually going to be exactly the same on the other statement. So those sections are actually not affected. So I'm going to go over here to my indirect statement, and I'm just going to copy and paste that. I don't have to repeat all that. So once I have that bottom section complete, I've got it complete for both statements. So the only thing that's going to be different on these two statements is going to be this top section, this operating activities section. So that's why I always do that section last. And even though it's going to be computed in a different way, ultimately I will get the same answer either way. So the first one that I'm going to tackle is operating activities direct method. The very first item says cash received from customers. I want to be able to calculate my cash received from customers, and once I get that, I'm going to plug that into that first item. Now to do this, I want to consult my formulas. Here's where this formula page comes in handy. We've got all these different formulas, but this brings all of them together in one place. So it says direct method, that's what I'm working on, cash received from customers. What does it say about how I'm going to calculate that? Well, first of all, it's going to be the sales, and then I'm going to look at accounts receivable. If there's been a decrease, I will add that. If there's been an increase, I will deduct it. So that's the way I proceed with this formula. I get the sales first, then I look at accounts receivable. If it's a decrease, that will be positive. If it's an increase, I will actually deduct that. So in order to do this, I'm going to go all the way down here to the bottom of my statement so that I can have some room here to do some additional calculations. Now I'm going to plug in the sales. Where will I find sales? Like I said, at first you don't really know where to look, but I know exactly where to go. That would be on my income statement. The very first thing on my income statement would be the sales, 1,750,000. So I'm just going to write that down so that I can work with it as a calculation. So 1,750,000. Now the formula also said that I needed to look at my accounts receivable. Now that would be on my balance sheet. So the second asset on my balance sheet would be my accounts receivable. Now last year it was 83,200. This year it's 71,000. So you see how it has changed, and it's actually decreased. I have less accounts receivable than what I had the previous year. So I've got 83,200 and 71,000. Well, 83,200 minus 71,000, that means that there's a difference of $12,200.